What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today, my guest is Jake Wujastyk, founding member at TrendSpider. Really had a fun conversation with Jake today. Been following him on Twitter for some time. Really a big fan of Jake's technical analysis on social media. He does really just a great job, and he's just one of the good guys on FinTwit. We talked today about how he got started in the industry, how he got started with TrendSpider. He's actually 12 years old when he got started trading. I thought that was a pretty interesting story. We talked about his process, his strategy, how he uses social media as a tool was really a focal point of our conversation today. Of course, we talked a little bit about GME, RobinHood, how he trades the hot sectors, but focuses on the laggards. I thought that was pretty interesting. We discussed supply and demand and the lack of understanding of these curves in the markets. That and a whole lot more. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. Futures Radio Show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 future symbol RTY and Micro E-mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Jake, what's up, my friend?
Hey, thank you for having me. Glad to be here.
Oh, it's great to have you. You know, I've been following you on Twitter for some time, and I love the stuff you're putting out, man. Really great work. We talk about how people are helping the community. It's always great to see people. I've been on Twitter for, I don't know how many years now, but seeing traders come in and help other traders, I think you're definitely at the top of my list. I think you do great stuff, my friend.
Hey, thank you so much. There's a lot of mistakes that I've made in the past, and I still find myself making mistakes. So I figure I might as well share some of the lessons that I've learned in the markets, so maybe other people can learn a little faster than I have. So happy to do it, and I really appreciate that. It means a lot.
I mean, I feel the same way when it comes to your mistakes. I mean, that's really what teaches us everything, right? You just have to get out there and just start doing it. And when you make mistakes, you learn. And as time goes by, hopefully you don't make those same mistakes again. And you try to help other traders understand your mistakes. But no matter what, everyone told me as a young trader, all of the mistakes that they had made, I still kind of made the same ones until I learned it.
Yeah, I mean, it's kind of like those that, don't touch the hot stove, and you're like, oh, well, I'm going to touch it anyways, see what it feels like, And I think a lot of people think that trading is just this generic kind of one size fits all, but everybody has a different personality, and I think people think that whatever works for somebody else is going to work for them, and that's just not always how it works. Everyone's got a different threshold of what they're willing to hold as a loss, what they're willing to hold as a gain. And I think as much as I'd like to help people on Twitter, I think it is important, though, that I do mention a lot of the time to people, hey, you got to figure out your style and what works for you.
No, absolutely. You're absolutely right. No two traders are the same. And you just take tidbits from what you're learning from other traders and develop your own style. And, you're a pretty young guy. I don't know how old you are. You don't have to tell everybody, but I know you're a pretty young guy and you're very knowledgeable for a young guy. So I'm just curious, when did you get involved in trading, and how did this all begin with you and TrendSpider?
So I got involved when I was about 12 years old. My dad, I'm still trying to figure out the reason why. He wanted me to get in the stock market. He said he would create a custodial account for me, or custodian account. He put in $1,000 into the account and said, hey, here's Scott Trade's little book of different stocks. That was back when Scott Trade was still a thing. Here's some stocks you can check out and, buy what you think is good. And, if I would have just bought and held stuff, it would have probably been a lot more profitable than me just going in and being a 12-year-old and trying to trade it and buying, I can buy 500,000 shares of this stock that's 0.0001 cents. Why would I not do that? And so, just me kind of being this 12-year-old, not knowing really what I wanted to do. Blew up my account pretty quickly. And then kind of when I really started to trade more actively was during 2007, 2008. I was in high school. I was 15, 16 years old. I'd heard my mom and her husband talk about, oh yeah, we made this much money trading, and not bragging about it, them just talking, and I overheard it. I'm like, wait, how much did you make? And that was when Wells Fargo was crashing, and then Wells Fargo had, these crazy moves to the upside after that, and they were just trading it. And so I traded some of my money and also her money that she kind of gave me full access to, and I just made, just some wild trades, just being a 16-year-old kind of impulsive, just crazy person. Ended up getting pretty lucky during that time, and we ended up making some good money through that. Because I think I had like $2,000. I didn't have a lot of money, but she did give me access to her account. I still trade family money pretty often. And so, yeah, that's when I really started to kind of get some of these big experiences with big swings and kind of crazy wins, but also losses as well. Yeah, it really just started from my dad, who hates the stock market. And then from there, it kind of took on its own natural curiosity. My mom's always been in the stock market. Oops. Sorry. My alert on TrendSpider just went off. But yeah, so my mom's in the financial side of things. So she kind of allowed me to, just take kind of some control over her account. And I don't know why she did that, but it ended up working out. And then I got into TrendSpider. I had a subscription service, just posting my charts, posting essentially research every night, like 30 different charts, and subscribers could do whatever they want with it. And then one of my subscribers one day reached out and said, "Hey, I've got somebody I know from my childhood that is looking to build this business with somebody, and they're looking for a partner." And I was like, okay, well, I'll check it out. And yeah, that was kind of how I met Dan, who's the CEO and the founder, and really just kind of hit it off from there and just started growing the company.
It's crazy, man. It's such a young age. I mean, I thought I was young when I started on the trading floor when I was 18. You're starting at 12. It's young,
Yeah,
man.
I mean, I started, dabbling in the markets. I wouldn't say I was a trader by any means, but
No.
I definitely was looking at that point, I was just looking at kind of trend and, line charts. I didn't even really know what a candlestick was or any of that stuff. So it definitely evolved over time. But 12 is when I first started becoming, I guess, a market participant, if you will.
No, I think that's awesome. I really do. And how did you end up developing your style?
So just kind of like just seeing what worked, seeing what didn't work. So my style is really focused around looking for a sector or some type of industry that's hot, and then finding the laggard. So, Apple's up this much, but whatever's in that sector, it has not moved yet. Or, like the marijuana stocks right now, looking for what's hot and then looking for what's lagging behind. And that's something that I really focus on, is just looking for these laggards. So for electric vehicles right now, I'm kind of looking at what's hot and then what hasn't moved yet, that type of thing. So I will play the leaders for sure, but I'd rather play a laggard because you have a little bit of an idea of what the leader has done and what the laggard could do. So that's my style as far as kind of how I look at, the particular stocks I'm trading. And then from a technical perspective, I'm always looking at volume. The volume weighted average price is something that I really integrated into my charts after meeting Brian Shannon.
Brian Shannon, yep.
Yep. Yeah.
The
and
man.
It's funny. He's the man, and he lives really close to me. So we've been able to create quite a friendship, and he's been a great mentor. But I've always looked at volume. I've looked at, big areas of volume and where that volume is coming in. And back in the day, I didn't really have the anchored volume by price, which is something I use all the time on TrendSpider, which is the ability to see the volume by price from pretty much an anchor point. So kind of using Brian's anchor strategy And then instead of just looking at the average price since that point, you're looking at the overall volume nodes and seeing where is price really aggregating. And so you get more of an idea of an area rather than just one price point.
Yeah, I mean, Brian is the one who got me to put the anchor on my chart. I really can't. Every time I go to my chart, I'm always anchoring in different areas I think are important. And that's a shout out to Brian. Just going back to your style, you like the hot sectors, and then you look for the laggards.
Mm-hmm.
It's interesting to me because I would say majority of the people that I talk to are the ones that find the hot sectors and then trade the leaders. They like the ones that are outperforming because they think that they're going to continue to outperform, right? I mean, Ian McMillan's just one of them, but I talk to a lot of traders that think that way as well. Why that route?
Because then I can get an idea of, what is possibly to come. If I'm watching a hot sector and a leader, we don't really know where that ends. Whereas maybe the leader starts to cool off and that money is then cycled into the laggard to catch up. So it's kind of like being able to see a little bit, I don't want to say in the future, but if you see what the leader is doing, you have an idea of what the laggard could do just based on that leader's price action. And generally money's cycling. If something gets really hot, it kind of pulls back and then it finds some of the laggards. So that's definitely the way I kind of look at it, is being able to see what has the leader done, and then I can kind of apply that to the laggard and see what's going on from that perspective.
Got it. Yeah, no, I totally I understand that. And then when you go to your technicals at that point, so give us an example. You talked about marijuana stocks. Let's use one of those as an example. You found who was the leaders in that sector, to where then you kind of trickled it down and found some of the laggards and said, this is where I want to be.
Yep. So I'll give an example. Yesterday's trade. So I was told about ACB, Aurora Cannabis, over the weekend, or I know what it is, but someone said, "Hey, this is an interesting setup." And generally, I don't like Aurora Cannabis because they do dilute quite a bit, and sometimes they'll just dilute on a pump. But yesterday, I was looking at the chart. And I'm looking at Tilray, definitely one of the leaders. Just, I wouldn't say it's fundamentally the best company, but it's just a hot marijuana stock. I think Tilray was up 10, 11%. GRWG was up 10 or 11%. And then I looked at ACB and it was up like 4.5%. And so I was like, well, there's kind of an inefficiency here. And I bought in, I think ACB at like $11.90 cost average. I think I started buying at $11.77. At that point, I think it was up about 5%. And then it ended up closing the day around $12.72. And then this morning I sold it kind of on that pop around $13.40 cost average. So, I'm not always looking for the whole move, because if I do go into size, I want to make sure I'm locking in some of that profit. But that's kind of an example where, Tilray, GRWG were definitely leading. ACB was lagging a little bit, even though I don't really like the company fundamentally. I think it's kind of a crap stock. It's something that people trade, and there's volume and it's liquid. And so essentially that's kind of the way I was looking at it. Tilray, GRWG are hot, ACB is lagging, and then ACB kind of caught up. And it actually did the same thing today. I think ACB was only up 5% pre-market. Tilray was up 12%. And now you see ACB, I think, did get up to around 11, 12%. On the day. So just kind of looking for those inefficiencies and kind of correcting themselves with time.
You post a lot of charts, and that's one of the ways that I found you, obviously through TrendSpider and then your own personal Twitter account. And your analysis is why I really like is because it's clean, it's simple, it's comprehensible. Like you can look at it and say, okay, I understand exactly what he's saying. When you go through finding this hot sector and then going to find the laggards, what are your technicals of choice to help you execute those trades?
So definitely the volume by price. I guess I kind of coined this term volume shelf. So when I saw Aurora Cannabis, the first thing that I looked at was I anchored the volume by price from those March lows to see where was a majority of volume holding. And I'm generally looking at either the daily, weekly, or monthly. If I'm on, a lower time frame, it's generally just for, an entry or an exit. But if I'm doing the overall analysis, I'm generally looking at the longer term view, and then from there able to go into, let's say, the 15-minute or the 30-minute, 65-minute. Shout out to Brian for that. He taught me the 65-minute. And then seeing what's going on there. And it's really just price action. So just looking to see, higher highs, higher lows, just overall trend. Sometimes I even just look at the line chart, because that's really how I got started, was just looking at the line chart and looking at trend, higher lows, higher highs. And then, sometimes I'll pull up like the MACD just to get an idea, because at the end of the day, it does become self-fulfilling a lot of the time. A lot of people look at the MACD, MACD crosses, everybody kind of sees that. So it's really a mix of that volume by price, the anchored VWAP, and then looking at just overall price action and trend. And then sometimes I'll throw a lower indicator on there, like the MACD, or maybe the percent range, to see if something's really gaining momentum.
Got it. Yeah, I took a lot of notes here. So we're going to pause in just a moment for 30 seconds, and I want to come back and I want to talk about how you found these things to be your edge in trading. So we're going to talk a little bit about your edge. And you also talked about how you look at hot sectors. So I'm going to see what you think about GME. And we're also going to talk a little bit about how you think that, you talk a lot about supply and demand and how a lot of traders lack the understanding of curves. Mm-hmm. So I think we'll probably kick it off with what your edge is when we get back. So hang tight, traders. We'll be back in 30 seconds.
Why did I add futures to my trading strategy? 24/7 access to diverse global markets, like wheat. Can you say growth opportunity?
We should probably harvest that.
Get S&P 500 and NASDAQ 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-mini options with TradeStation. Get a piece of the pie now.
Welcome back, traders. Jake is still with us. Jake, we left before that break hearing you explain all the different indicators that you're using. I wrote down, obviously we're talking about volume by price, price action, MACD, VWAP. Is it VWAP or VWAP?
I don't know. If you ask Brian Shannon, it's VWAP.
That's
and I just go by with what he says, because he'll make fun of me if I say VWAP. So
that's why I did it first. I was like, I'm going to see, as somebody who works with Brian, what do you think? I said VWAP kind of on purpose there. Sorry, Brian. Yeah. And then, and you talked about trading the laggards. And to me, obviously, you're choosing that. And I was asking you, why that way? And obviously, you're doing it that way because you feel that you have an edge. Talk to us about how you feel that by trading the laggards and using these indicators, what gives you an edge versus other traders?
I think it allows me to come in a little early and see these things before everybody else is seeing them. But, and I think one edge that I have is just being able to go on social media and decipher, hey, this is something that's being talked about a lot. Actually, when I was younger, that's how I really found a lot of these plays, was literally just going through and seeing, hey, this stock has been talked about literally 10 times. This was back when Yahoo message boards were a thing, before really Twitter or any of these other things were actually popular. And I remember, I'm 13, 14, looking at all these little message boards, and I'm like, wow, this stock's been on here like 6 different times. So, and a lot of the time you'd see the stock not move yet, and then it would kind of make its move after. So generally what I do is I'll go on social media, I'll get an idea of sentiment around something. And if something's, being talked about a lot, but hasn't moved yet, that's when I'll start to look at it and kind of see, okay, this is becoming a hot topic. It hasn't moved yet. Maybe that's when I get in and kind of get in before the rest of the crowd. Even though the crowd's talking about it, it hasn't made its move yet. So it's really about using social sentiment as well. It's not even just about technicals. It's about what other people are talking about, because at the end of the day, the market is made by these participants. It's not just one hand that's pushing it. It's thousands and thousands of people making these trades, and you really have to see what everybody else is watching too.
Boy, has social media changed the way this business operates, hasn't it?
Yeah, yeah, big time. And I think that's an edge in itself. If you can take all of that crazy information on Twitter and make use of it, I think there's some really powerful information on there.
And what do you think about what happened with GME and Reddit and these Wall Street bets?
I mean, as much as I think, GME and all of those definitely had retail traders adding to the fire on the demand side. A lot of these stocks were so shorted. I mean, it was almost impossible for them to go down once those margin calls started hitting, and people were just forced to essentially buy the stock. And this brings up an interesting point. I read the book The Quants, I think, when I was 18, maybe 19. And The Quants talks about essentially what happened in 2007, 2008, and all these weird discrepancies where these really crappy stocks were moving up and these really good fundamentally sound stocks were going down because of these types of instances where you have just you have these margin calls coming in. You've got these good stocks that are collateral. They have to essentially get liquid in their account, so they start selling good stocks to buy bad stocks. And as much as I want to believe that retail is the one that moved this, I think it definitely added the fuel to the fire. But I think this was bigger money. I mean, if you go and look on Cheddar Flow and some of these other order websites, there were some massive orders coming through that were not retail. It was just, those are not retail orders, millions of dollars on the call side or the put side. And so I think it was just one of those things where the media just exacerbated the whole thing and everybody became part of the move, which did hurt anybody who was on the wrong side of that trade. And, there was a lot of naked shorting going on, which just created just this massive just move up. And I think it was unprecedented though, because you saw some of the really big guys on Twitter buying puts on GME at like 250. The next day it's at 470. So it was just one of those things where it was so out of control. It's like a forest fire. And I think I mean, I don't know how many calls I got from friends I haven't talked to in years trying to ask me about this. Hey, should I get in? And I'm like, okay, this is definitely not good. So
exactly.
And everyone's like, oh, you didn't trade that? I'm like, no, it's not my style. I don't go and just go to the casino with everybody and throw money around. GME literally was getting halted and the swings were insane. Like, I don't want to put my part of trading is mental health too. You don't want to put yourself in a position where you're so stressed you can't even make a logical trade. And so I think that's important too, is just sticking to your plan. It's like going to play blackjack and the guy next to you is hitting double aces and getting, kings on both aces like 3 times in a row.
Exactly.
Sure, you want to go play and you want to do that, but the odds are not in your favor over time. Kind of the law of large numbers. You get to that intrinsic statistic over time that, sure, you could have won a couple times on GME, but at the end of the day, it wasn't something that has any type of pattern that's even tradable, for me at least.
Yeah, no, same with me. I think what everyone talked about, the short squeeze, I mean, I have no loss for anybody who's that leveraged who is going to get squeezed like that. I mean, if you're that much into any one position and you're getting burned out, the way that what happened there, well, I mean, shame on you. I mean, we talk about managing risk. It's like, how could a fund like that not be managing their own risk? I mean, just get themselves caught like that, and for me, it wasn't really the short squeeze aspect of it. I mean, obviously you look at it and it was like looking at something where you're going, you're staying tuned to it. I think it changed some things maybe for the industry that we don't know about yet. And I think a bigger part of the story, and it will still continue to be, I think over time will be the biggest part of the story, is that, Robinhood stopping people from trading. And I was a trader my whole life. I don't like that at all. I'm curious to see what comes of that. But I think another lesson is really just the impact of social media. I like you said, I mean, hearing you say that that's a part of your edge today, I'm kind of in the middle between some of the older school guys. I'm maybe an old school guy because I came from the pit and, I've been doing this for over 20 years, but I'm also somebody who's always embraced technology. I've always embraced the new thing. When crypto came out, I'm like, why wouldn't you want to trade this? I wish I still held everything from when I bought it, but that's a whole other story. But I've always embraced it. I've never been like, oh, this shouldn't be or whatever. I think you have to embrace it. And do you think that a big part of what new traders will be looking at is it's not going to just be technicals and fundamentals, but it's really going to be, I know a lot of the bigger guys out there are analyzing social media, but do you think that a lot of the newer traders are going to be coming in and looking at that as an actual tool?
I think it's important that they would. I don't know if a lot of people would catch on to that. I think, I think there's people that are naturally just thinking of the right things when trading, and there's people that get into the market just like, anything. If I went to go be a landscaper or something, there's just things that I probably wouldn't even naturally think about that would work, because that's just not how my brain works. And, I think the newer traders who have that type of intuition are likely going to start looking at stuff like that. But there's a lot of people that just don't have the market intuition that probably aren't going to think social media is important. But as FinTwit gets more popular, I think it's just going to be natural that, people are on it more and they're going to see things. But, maybe not everybody puts two and two together, but there's definitely a self-fulfilling prophecy there where more and more people are starting to look at social media, and it becomes this just funneling of money. Everybody sees PLTR and, we got to get in, and they see a couple of people that they really, really respect getting in. And they're like, okay, I'm going to follow them, which isn't always a great idea because, everybody's makes, trades that don't work. But I do think that the newer traders who really do have maybe not a career in this, but definitely a passionate hobby that will continue their whole life, I think it's definitely something they'll start looking at more. And I think it's been happening for last, I don't know, 10 years at this point.
I agree. I just think that now more than ever, because you're seeing so many more new people come into the industry. I don't know what the numbers are exactly, but I know over the last, I would say 2 years, I think a big part of it, obviously with COVID, people being at home, more and more people opening up accounts. You're going to lose a lot of those people. There's no doubt. But I think that a lot of the newer traders that I talked to, really new within the past year, are starting to use social media actually as a tool. I mean, and I'm going to ask you how you use it. And before that, I want to say a little bit on how I've used it. You and I have been on for a while. And I use it as a tool in the sense of, I like hearing what other people think. Now I'm confident in what I'm doing. So I like hearing what other people think. I don't need validation in my trade ideas, but I like seeing what other people think. I want to be proven wrong in a lot of sense. I mean, I see a lot of people come on Twitter and they just, if somebody's bearish, it'll get all these likes because everyone's bearish. Okay, yep. Well, I don't really look at it that way. I look for somebody to change my mind, actually, to say, I use macro themes, should back up a little bit, as really the side of the market that I'm trading is maybe the side that I want to trade a little bit bigger, more aggressively, or maybe just the only side I would want to trade. You look at the dollar, for example, more and more people that I've been following over the past year talking about, the dollar is going to continue to get creamed. Some guys have been saying this for a long period of time. I take note of that, and I'm trading things against the dollar, and look what's happened in a lot of markets. And that's stuff I got from social media. I didn't get that from, I read other things as well, but I think that's how I use it as a tool to just help me just understand sentiment and seeing what some of these minds are saying and seeing how things pan out. You've been onto this. I think you get great engagement because you ask questions on Twitter. You do things. I'm really a fan of what you do on Twitter. I think I never really thought about you actually using it as a tool, but obviously hearing you today, you are. Talk to us about how you are specifically using social media as a tool.
Yeah, so a couple great examples of this recently. Fubo, for example. Maybe 3-4 weeks ago, when Fubo was tanking from that 62 high, I think it was at like 28. And I posted that morning thinking about entering Fubo, and it got a ton of likes, more likes than I usually get. And I'm like, maybe I shouldn't enter yet. I think too many people are a little emotional about this. And literally that day it dropped 20%. And what I've noticed is generally, if you post something and it gets a lot of engagement, a lot of likes, you almost always get that flush right after that. And then it ends up actually being pretty indicative of a move to the upside. So for example, Fubo, it had that move down after I posted that. I'm like, this thing's got a lot of likes. I'm not, and I don't always like to be there's kind of two ways, sometimes you do want to think like the crowd because then it becomes a self-fulfilling prophecy. But then if the trade gets too overcrowded, then it becomes an issue. And so I've noticed a couple times, Fubo, I think Big C was another one. I initially got in at like 71, a lot of likes, a lot of engagement. Thing goes down to 58, flushes everybody out. I'm kind of a contrarian person there. I doubled down at like 61, and then it finally kind of resolved to the upside after a lot of people. It was almost like you get the engagement, it drops, then you don't get any engagement, and that's kind of the signal. It's like, okay, not a lot of people are interested in this anymore, and now that to me tells me there's not a lot of people empathizing with me on this trade anymore, which means that they're probably not in the trade. And then they become the people chasing it when it finally does make the move.
I love this. I love hearing you say this. And it makes me think about a lot of things. Number one is we're all talking about squeezes lately. I actually just did a show talking about trading squeezes. It was a trader's edge on how they do it. And this is not something I trade futures, so it's a little bit different. I mean, obviously when, silver was one of those things where I was looking at it going, man, wait till these guys get caught too long. They started raising margins. I'm going, it's tempting to get shorted for that similar thinking to what you're just talking about. But I think for these stocks, I love that thinking. It just is like, it's like everybody trying to get in that one lane, right? The lane's going by and everyone's going, I got to get in. And then everyone tries to get in that lane and then no one wants to be in the other lane. And then that lane just keeps moving past them. So it's like everybody rushed to get there and now that's done. And now that lane the other lane just passes them right by. And no one tries to go back in because everyone just goes, the hell with it now. I'm staying in this lane. And it's kind of, I don't know if that's the best example, but thinking about hearing how you do that and going back into tying, how do you tie that into because I'm just trying to put together the puzzle of everything that you're doing, because as I was sitting here, you have your technicals and to me, they seem like they are really just, they're secondary to you. It starts off with what's hot. Then it goes into, let's do some social media on this. Let me see what's happening. And then from there, obviously you have technicals along on everything, but then you have these technicals to say, well, look at this is starting to come in line. Am I wrong, or am I building this puzzle the right way?
No, you're building it perfectly. And honestly, I look at, I don't want to say I look at fundamentals, but I look at, what is the industry? So for example, electric vehicles are clearly getting hot right now. There's some leaders that are, doing their thing, but I also have, and this is just kind of me using every bit of information I have a lot of friends who do a lot more fundamental analysis than I do. So, I have friends who come and say, hey, check out this stock. I really like it from a fundamental perspective. MG&I was a good example of this. I have someone, a friend who's the guy actually coming out to snowboard with me this week. And he is really, really good at just finding these plays on the fundamental side and just the business model. And so a lot of the time someone will throw something at me and say, hey, I've looked at this company, blah, blah, blah. MG&I was the one that kind of he brought up the other couple weeks ago, and it had a big pump and then it pulled right back down to the anchored VWAP. I use raindrop charts on TrendSpider. So I was looking at the raindrop chart to get an idea of conviction by buyers. And this kind of brings up the supply and demand curve stuff. But essentially, I will take what they're looking at. And then once the technical setup is there, I trust them enough where, they've done their homework and I see the technical setup and I'll enter. So MG&I was a great example of that. I think I got in at like 26.50, sold at 39 within like a week. And the thing is there wasn't a lot of engagement on that post. And so I'm thinking like, this is not an overcrowded trade. This is just going to keep getting chased up because not a lot of people are trading this. And it's still one of those ones that really doesn't have a lot of engagement. So to me, it tells me the average retail person probably isn't even trading this yet. So that's an interesting one. It's just a mix of really using what I see on social media as almost an indicator, but also friends in the market who do their own homework. It would be dumb for me not to take their input and consider it. And considering I know their track record and that they're really good traders and stock pickers.
I love how you put this together. I mean, it just makes sense, and I think that so many traders out there, all these tools are basically everything that you have is right there in front of you, right? And it's just, we all have the same information. I tell people all the time, I said, if you really want to make it in this business, you're going to have all the tools you need. Nowadays, it's not like 20 years ago when I started where we didn't have the tools that we had now. It's about you thinking outside the box and just putting something together that you believe in and then going out and executing it. And just hearing you talk about it, you believe in this. It's like you're putting together your own puzzle. I think it creates, discipline and patience, all those things that everybody talks about. That all happens because you put together something that you believe in, and these things have to happen in order for you to trigger a trade.
Yeah, and I mean, I didn't bring this up, but this is one of my more go-to indicators. If I post a chart and it has a drawdown and I'm in it and it gets a lot of likes or engagement, and then people start saying, "Oh yeah, I cut it, I took my loss." And I see a lot of people starting to do that. I'm like, okay, we may be getting close to the bottom because this tells me that we pretty much capitulated. And so it's interesting that sentiment as well is something that works pretty good. When you start seeing max pain and people start commenting, "Oh, I'm down so much, I just took my loss and moved on." Generally, that is a sign of capitulation, and that's kind of a reset in whatever stock you're looking at, and you kind of get all those weak hands out, and it creates that new leg to the upside.
Yeah, no doubt. I mean, just going back to it for traders out there listening, I mean, you want to use social media as a tool. You have to put something together to where you actually are being consistent with recognizing something like what Jake's talking about. I think that's what's so interesting about you using it. And like we said, I know that it's been being used for a while now. I've been using it. You've been using it. But I think with this I think what kind of triggered, going back to GME a little bit, is what I think is triggered is you're going to have social media is going to increase even more as a tool. It's going to change over time. This industry is always changing, right? And sometimes the tools that we have in front of us work one way for a period of time, and then they change, and then they shift. And there's just interesting things going on right now. I mean, 2021, man, I don't know. It's off to a start that it's just the insanity just keeps going.
Yeah, well, I think the whole point of the market is finding inefficiencies in the market. And back a decade ago, or even more or less than that, it took a while for these price inefficiencies to work themselves out because information was not as readily available. But now information is so easy to acquire. Those inefficiencies are optimized within, sometimes an hour. If there's some really weird inefficiency in whatever X stock Y, that is probably going to be ironed out pretty quickly. Whereas back in the day when there wasn't all that information spreading around, it took a couple days for that information to get to the people going to move the market.
I just go back to even my career. It's like, I went from a real short-term scalper in the S&P, right when the S&Ps were launched, the minis. And the faster the machines got, they basically, I used to have a moment. People say, well, why don't you scalp as much anymore? Well, okay. I don't scalp as much anymore because they would turn on me quicker now than they did before. Okay. So why am I going to put more size on when the trade is against me quicker? I don't have that little window to cover. And you nailed it when you said the windows of inefficiencies are smaller. So for me as a short-term trader, I had to go on a longer time frame. Otherwise, I was going to have to cut my size down dramatically. And I still feel like I can do it. But now I'm just working so much harder for less. And I've had to change. I mean, I just look at it. It's like it goes back to, the social media. I just feel like right now things are changing again right in front of us. And I think we could talk about the squeeze, but other things are changing right now that we don't know what they'll be, but we'll be watching and we have to adapt to them. It's just the way I look at it.
Yep. And it's even interesting because, back a couple years ago, a couple $1 billion company, a $5 billion company was a pretty big company. Now now a $5 billion company can be moved pretty quickly on social media, just because of how many market participants are looking at it. So it's really interesting to see what used to be these bigger market caps. I mean, 5 billion isn't massive, but back in the day, it wasn't a small company. Now you look at $5 billion market cap, you're like, oh, that's like a small cap, like
I know.
compare it to $1.6 trillion Apple market cap. And so it's really interesting to see that even these, what used to be bigger companies in the billions are now almost trading like penny stocks. I mean, Fubo, Big C. I mean, those are some big moves that are happening in those companies. And it's just kind of crazy that social media is driving a lot of it.
No question. No doubt. One more thing before we get into rapid fire today. You talk about how supply and demand and the lack of understanding these curves in the markets is something it's important to you. Talk about that.
Well, I think there's a fallacy in the market that, prices have to do something because there's a one side, right? Prices go up because buyers stepped in. Prices go down because sellers stepped in. And, that's not how prices move. Supply and demand curves are what really helped me understand why prices are moving, right? So like I studied economics in college, and it was interesting because, generally like in microeconomics, it was more or less like using the supply and demand curves to talk about pricing and business models and stuff, but it's the same exact thing in the markets. People say, oh, the market's tanking because sellers are coming in. Well, before the elections, the markets didn't tank because there was a big uptick in volume. The markets tanked because there were no buyers. Nobody wanted to participate in the market before the elections. So you had a drop in prices, not necessarily because there was this big selling frenzy. It was because there wasn't enough demand, and that shifts the supply and demand curve. So you can actually have a decrease in price with simply just having a decrease in demand and supply remaining constant. So, everyone thinks it's this one side. Prices go down because sellers stepped in. Prices go up because buyers stepped in. Well, prices can also go up simply because demand remains constant and supply dries up. And so being able to understand that, you can really get some interesting perspectives in the market and not just look at it as, oh, buyers stepped in or sellers stepped in.
I don't know why, because everybody thinks, I said this before, trading is not about black and white. It's a lot about operating in the gray. And I think when people say that this is the reason this is happening or that is the reason it is happening, that's not always the case. And when you say that the market was going down before the election, well, look, I for years, okay, I look at myself. I'm working orders almost every tick a lot of times. And when things start to get busy or there's things out there that could fill me and I can't manage risk easily, I start pulling bids and offers. Period. When things are going on in the marketplace to where at any moment news could move it, I tend to work less orders and I wait to do everything at the market. Most of what I do is at the market anyway. So it just depends on the environment. When markets are slower and I know that there's not a lot of headline risk out there imminent that I know about, I work more orders because I'm like, maybe I get filled on this. Maybe I get filled on that. I work my stop. But when markets are whipping around and there's a lot of headlines, I don't work anything. Unless it's so far off the market. And that's when all of a sudden you start to find liquidity again because now more people are piquing interest. So I agree with you. It's not just always as simple as this is what's going on. It's not just, like I said, black and white. There's multiple factors that could be contributing. So
yep,
good stuff,
agree.
buddy. We've got a rapid fire segment next. You ready for those?
Yeah, let's do it.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. Jake, first question for you. What trader has influenced your career the most and why?
Definitely Brian Shannon. He really took me under his wing and mentored me, and really, Yeah, I've always looked at the markets in a way of supply and demand, but I always didn't look at the markets the way he does. And he's just really mentored me and really taken me under his wing. I did have other mentors when I was growing up that really were a huge help to kind of lay the groundwork. But Brian just kind of brought me to that next level of understanding things, and not just about technicals, but just about trading overall. And he's just given me a lot of great pointers that have really made me a better trader for sure.
Yeah, hard to find a better guy than Brian. He's just a great guy. What was one of the hardest things for you to overcome in trading?
A couple things, accepting that you're wrong. That's where ego comes in. I think everybody has to have somewhat of an ego. And ego doesn't mean that you're pretentious. Ego is just part of your inner kind of self. But being able to kind of tame your ego. But then also one of the biggest things is just accepting that if you sell something, it could possibly go higher. And I think a lot of people get so caught up in go selling for 20% and it goes up 50%. And they're more worried about that they just lost 30% extra profit than they are making the 20. And, as long as you're making money and you're doing it consistently, that's the whole point of the game. And I think a lot of people just get so caught up in, oh, I could have made this much more money. You can't even really focus on your wins and celebrate them because you're worried that, you're going to miss the whole move. And that's why I mentioned, ACB, for example, I think I sold at 1340 and then like 10 minutes later it ripped to like 1410, which was the trade we talked about with the Laggards. And if I didn't kind of train myself to not worry about that, my old self would have just been so down, like, oh, how could you have sold early? And sure, maybe you can sell a little later next time, but for me, it was just learning how to accept your wins and not worry about how much money you left on the table.
How has your trading process evolved over the years?
So it's really I think social media is a big part of it. Back in I guess in 2007, 2008, 2009, I was looking at message boards. And now it's kind of Twitter. It's more of this liquid, fluid social media where it's, just a lot more involved. And so my process has definitely changed where I'm looking at the market a little more patient. I'm not jumping in right away. I'm generally looking at something for days or weeks, maybe even months at a time, and then seeing how the market kind of reacts to different things. Because the last thing you want to do is you jump in something you just found 2 minutes ago. You don't even know what the spread is on the stock. Maybe you're market ordering all of your trades, and then you go and market order this and it's a 10% spread, and you just move the price, 5% because you didn't realize the spread was so big. So a lot of my process is really focused on really just being more patient, letting the trade come to me, let those plays kind of come to you, but also being confident in my trades. There's been a lot of trades that I took a loss on and they ended up reversing, which is fine because then you just get back in. And that's another thing, I think a lot of people think, oh, I sold at a loss, I can't get back in. And that's not the case. You can wait until it breaks out and then you get back in. So the whole process is really more focused around patience, less impulse. I was a 16-year-old, very impulsive, teenager, a lot of testosterone flowing around, buying ridiculous orders at my mom's account. And I'm like, look back, I'm like, holy crap, that was the dumbest thing I've ever done. But, it kind of made me the trader I am today.
What is one attribute that you believe every trader should have?
Patience. The ability to, put your ego at the door. As I mentioned, you have to have some type of ego, because if you don't, you have to have the confidence to go into a trade. You can't just say, maybe I'm not, I've been wrong in the past. I'm going to hold off. You have to have some type of, backbone there of confidence to go and execute these trades. But too much can literally just blow your account. So that's definitely one thing. And then, not falling in love with the stock. That's something I've done in the past, and I still work on that, because if I really believe in it, and there's a lot of times where I'm just really early. For example, in marijuana stocks, I was loading up on Cron. I mean, I had a huge position, and I stopped out, and it turned, and I was like, I'm not going to get back in just because I took the loss, and I'm scarred from this. When really I should have said, okay, Jake, your thesis was right. You're a little early. Get back in and make the trade. So, just having confidence, but not an ego that you can see.
Favorite book about trading?
Yep, that is The Quants. But also I liked Confessions of a Wall Street Addict by Jim Cramer. Because it really kind of made me realize some of the inner workings of some of these bigger institutional guys and kind of what's going on. The Quants was interesting because, I was trading during 2007, 2008, and I didn't necessarily understand what was going on. And then that book really goes in and explains what was happening. That's why I was able to, see GME and AMC making these moves. I'm like, man, this reminds me a lot of what I read like 10 years ago, where these really bad stocks are going up, these really good stocks are going down. And, that book really made me understand how the market works. So Confessions of the Street Addict just made me kind of understand some of how these hedge funds operate. Also, though, the Quants just helped me understand, just even the beginning of that book, they talk about all these guys would go play high stakes poker in some random back room after work. And it's like, this is all a statistics game. This is based on probabilities, and that's obvious because poker players look at statistics on every hand. And so those kind of both made me realize essentially how the markets work, and then studying economics kind of put it all together.
I got to check out that book, The Quants.
It's a really great book. It's by Scott Patterson. It's just it's a great read.
What's the best piece of advice you received about trading?
So best piece of advice was from when I was younger, a mentor. I was probably 17 or 18, but it was really about about not getting worked up about not getting the whole move. I told my mentor at the time, hey, I just sold for 30%. It literally went to plus 80% 2 days later. He's like, yeah, well, if you think like that, you're going to drive yourself crazy. You're never going to be happy because you're always just going to want more, which actually makes you a more emotional trader. So that was the best piece of advice, was just, hey, if you have profits and you sell them, that's the whole point of this game. Don't be worked up about the 20, 30% that you missed to the upside. Because if you just keep doing that over and over again, 20%, that may be better than you holding for 100% gain. And then, 2 out of the 5 times that ends up going to a loser because it's just so volatile.
If you could go back in time and give the younger you, the 12-year-old Jake, some advice about trading, what would you say?
I would really just say, it's not about how quickly you can make money. It's not, it's not all about, just making a 200% win. It's about finding a process that works for your personality. Because, I had different styles of trading when I was younger, and not all of them worked for my personality. And, I'd find myself just kind of erratically trading rather than having some type of process. And so definitely, a process, having patience, allowing emotions to kind of stay to the back burner, and just focus on, what's worked for you. I think that's something I would definitely tell anybody. Don't get worked up that somebody made 100K on Twitter and you made $100, and you want to go follow them and try to buy a weekly option that's going to go to zero tomorrow, but you think you're going to possibly hit it big. Yeah. Just so patience and really focusing on yourself and not what everyone else is doing.
Yeah, that's one of the big downsides about social media. We didn't get into that today, but maybe next time we'll talk a little bit about that. If you had an elevator pitch me your edge in trading, what would you say?
I would say it's all about supply and demand, and focusing on not necessarily what I think, in my opinion, focus on what I know about the markets and go from there. Brian Shannon says the markets don't care about your opinion, or your opinion pretty much doesn't matter. So, really focusing on supply and demand, focusing on, what a lot of other people are looking at in the markets, but still making it your own. Because at the end of the day, the market's moved by participants in the market. It just doesn't move up because it moves up. So, being able to understand the supply and demand side of that, and really just focusing on, at least for me, leaders and laggards, and looking for these moves that haven't been made yet, within industries that are kind of popular at the time.
Last question for today. Favorite thing to do when you're not trading?
I'm in Colorado, so I like doing stuff outdoors. I like going to just hang out with friends and kind of just decompress. A lot of my friends aren't really involved in the market, and I kind of like that, because as much as I love the market, it is nice to have a little bit of a break sometimes. So just hanging out, maybe aren't trying to talk about the markets 24/7, because I'd say 12 hours of my day is literally just looking at the markets, or, social media about the markets. And so hanging out with them, getting different perspectives, and really snowboarding, outdoor stuff. We just moved down to Highlands Ranch in Colorado, which is a lot more kind of outdoorsy than being closer to Denver, where there's not as much kind of outdoor stuff to do. So really anything where I can kind of, get my heart rate going and get a sweat too.
Yeah. Well, Jake, it's, like I said, we've talked in messaging a bunch of times before. It's the first time we're actually talking. I'm just super impressed with you. You're such a good guy. I mean, you're great for the FinTwit community. Learned a lot about you today. We talked a little bit about TrendSpider, and tell us a little bit about that, where people can learn more about it. And this is Futures Radio Show. When are we getting futures on the charts, buddy? We need futures there.
Yeah, futures, we're working on it. We are integrating a new data feed into TrendSpider, and essentially TrendSpider is a technical analysis platform. And in the future, it will be a platform that you can actually execute trades through. We won't be a broker, but we will be someone that can bring in your data from whatever broker you're using and make trades through an API connection. So TrendSpider is really just that technical analysis platform that is focused on making the whole process of TA more efficient, seeing things in a new perspective. TrendSpider.com is where you can find out everything about it. And I actually I have a coupon code AC25 if anyone's interested, 25% off any plan, either a single month or a single annual subscription. And we do have a free trial. It's not like you have to go to TrendSpider.com and you don't really have a chance to even try this out. If you are a newer trader, we have a ton of content that we've put out to help you learn and understand the way to use these. And then we have a customer success team who will give you a one-on-one demo and show you through the whole thing while you are trialing the product. So, we really focus on customer just success in general. We want to make sure that the customer has all the tools they need to be successful using the product. And having that relationship is important, because there's a lot of platforms out there that really are pretty low touch or no touch subscription as service companies that really just focus on getting you in the door, and then it's kind of, it's all on you from there. And we don't think that's necessarily the way to approach it.
And real quick, you guys have two Twitter handles. Well, you have TrendSpider and yours. Tell everybody about those those handles.
Yep, at TrendSpider, just one word. Spider spelled SPIDER, not with a Y. Some people spell it like that. And then mine is just the same thing, at TrendSpider_J. So it's if you type in TrendSpider, you'll see all of those different handles pop up right underneath. So I'm always on both my personal, but I also run the TrendSpider account as well. So my content is pretty much on both of those handles.
Oh, everybody, you got to follow Jake and TrendSpider. Jake, it was such a pleasure to speak with you, my friend. Thank you so much for coming on Futures Radio Show today.
Hey, thank you. Looking forward to meeting hopefully in person one day when all this craziness is over. And I'm looking forward to being on again. And hopefully we'll have you on our show at some point in the future too.
Oh, absolutely. Anytime. And I look forward to having you back on the show. And I mean, remember the days where we used to meet people in person? I feel like everybody I meet now is on Zoom or Skype.
It's crazy. Well, hopefully, down the road, whenever that is, things can get back to normal, and these conferences can happen again, and people can be together, shake hands. I think that's a really important part of business. So
thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.